Hello everyone, let's discuss the term capital in this lecture. Capital simply means the funds invested by the proprietor, by the businessman into the business to start the business, to run the business, and to expand the business. Now I am going to explain this term in the context of sole proprietorship only. Sole proprietorship business is the business which is owned and run by an individual only. So listen students, just imagine if you want to start a business, you need some funds. In that case, you use your surplus funds and the same funds are invested into the business to start it. And same funds are termed as capital. But, but remember one thing, funds doesn't mean only cash or the bank balance. It may include the goods, it may include the other assets used by the businessman into the business. I write it here. For example, if you start a business with cash of rupees 50,000, buy a check, it means simply bank, buy a check of rupees 2 lakh by investing goods. Possible that the business you want to start, you are already having goods of that business. The goods invested into the business worth rupees 1 lakh, and some other asset may be furniture, may be the vehicle. For example, if you introduce your personal vehicle into the business for business purposes and the vehicle costing rupees 4 lakh, just see, you used your four assets: cash, check, goods, and assets. And totally, it means summation of this 7,50,000 you invested into the business. So you would say you started business with a capital of rupees with a capital of rupees 7 lakh 50,000. This is your initial capital. And remember one thing, you started the business with this amount. If later on you need funds to run and to expand the business, to grow the business, in that case, if you again introduce some funds, the funds are termed as additional capital or fresh capital. For example, after a period of 6 months, you further invest an amount of rupees 4 lakh. This 4 lakh is termed as additional capital and your total capital increased to rupees 11 lakh 50,000. So this is how you explain the term capital at the time of starting of business or at the time you introduce additional funds into the business. But now question arises, how to calculate this amount of capital if a business is running for a long period of time. In that case, friends, the capital is calculated with this formula: capital is equal to total assets of the business, it means total property of the business, minus total external liabilities. Total external liabilities. This is how the capital is calculated into the running business. Total assets, the total property. Out of that, if we make payment of outside liabilities, what is left is called net assets. Net assets means net worth of the business, and that itself is termed as capital. Now you may ask how the amount of capital is increased or decreased. The capital is affected by profits earned and the losses incurred by the sole proprietorship business. If profits are earned by the business, the profits are added to the capital and amount of capital increases. If losses are incurred, that reduce the amount of capital invested into the business. So dear friends, this is the concept of capital. If the concept is clear to you, press the like button, Share the video with your friends and the classmates and subscribe the channel if not yet subscribed. Stay connected and improve your knowledge.